bought another India bull. Porinju Veliyath joins in from Kerala. Porinju, hi, morning. I don't think we've ever interacted on a Sunday, but I hope for equity market participants this Sunday is worthwhile. What do you think the budget, Porinju, should entail for equity market participants? Any top anything on your wish list, the top 2 points from equity markets perspective?
Oh, good morning, Aisha. You are right. I think market might have got open, but the budget in the history of India is the first time on a Sunday. And it's too much happening kind of an environment in the market and, globally. So it's very interesting. But at the same time, the kind of importance what we used to give, 10 years ago, 15 years ago, or in the 90s to a budget from the stock market or investor point of view, it has come down dramatically. Now mostly the GST decisions are taken at the GST Council, and very important reforms are happening outside the budget. So in the last many years, the things have changed. So the importance of budget has come down, but still we all are happy, and the stock market celebrate budget, and it's an interesting thing. I feel it will, for the basic fundamentals and the valuations and the market trend, everything, budget will pass like a non-event. That's what I believe, except for some tweaks here and there. And maybe the finance minister won't dare to do any, trouble or problems to the stock market investing community. Already things are down. So there can be some improvements made, especially people feel the taxation is very high in general. Whether it is personal income tax, which is like 40%, that 40% we have to see, after giving the 40%, again, when you spend, you are going to spend 18% and sometimes more, 12%. So there is a high tax environment, but it's part of our financial discipline, the prudence, what the government is keeping since last 10 years. It's very important. It has to be appreciated. Coming to the stock market, the STT was implemented when there was no capital gain tax. The long-term gain was taxed at zero. So again, now we have the STT and the capital gains tax, and there is a huge dividend tax is also up to 40%. So because the dividend tax is like 40% for the HNI, the high-end promoters, especially individuals, it's going to, even the corporate tax is not very low, as people misunderstand. You have to include the dividend tax to that. Any promoter, getting a benefit out of the company, you have to take it as dividend, you have to pay even 40%. So the taxation, that environment, people are not very happy, but we have to live within our resources. So it's okay. But there can be some tweaks done with regard to the different taxes related to the stock market or investing. So I'm not an expert in the taxation and all, but I think there can be some positive developments on taxation regarding the capital market activities.
Interesting. Well, what you just saw on your screens was the Finance Minister's budget photo op at the Kartavya Path, the ceremonial boulevard, which was earlier known as Rajpath, of course. And now after this photo session, she is now proceeding to Rashtrapati Bhavan. First, she's going to be meeting the President. And then 10 a.m. is when she's going to be arriving at Parliament. And 11 is when the Union Budget 2026-27 speech is going to begin in Lok Sabha. So that, of course, what the Finance Minister's day looks like, and quite the hectic day. Her 9th budget presentation.
That's true. And my sense is that it's going to be a very policy-centric budget, and the kind of challenges we have seen from geopolitics is what what the street is looking at her to address. It's not about tax cuts or not about anything else, but about how do we manage the geopolitics of it. And her budget will talk about that in a big way. And we have Bala now joining us from Aditya Birla. Bala, what's your take of what the Finance Minister has in that iPad?
I think interesting. The way I think this budget is coming at a time And the GDP growth has been, of course, improving. And overall interest rates have remained somewhat low. But what is missing actually is the bigger growth that India can provide, especially at a time when the global growth is still a bit of uncertain, as you rightly mentioned about geopolitical risk. So all those things are coming at around the same time. But India is one, I think, has been doing pretty well in compared to the most of the global economy. Therefore, this budget, my own belief is, might bring in some kind of innovative way of tax structures. And given the fact that last year they took the steps of cutting down the GST rates in order to actually boost the consumption, this budget too, I think, will probably focus more on boosting the consumption by focusing on innovative tax structures, I would say, for middle class income people. That's one. And second is, the last 2 years, they have been, of course, keeping the overall capex, which ultimately the investment-led demand, I think, has to continue. I don't think it will compromise on the contrary. They would either maintain it or maybe even increase the capital expenditure in order to ensure they will find ways and means of how to take the economy to the next level of growth by spending money on those infrastructure which can be acted as a public infrastructure, as well as boost the whole economic growth across the different part of the sectors. And third, of course, is the manufacturing sectors. We have made a significant progress. The PLI scheme that they introduced about 3 years back, we have seen this year, even yesterday, as I speak, yesterday the Apple CEO and globally has acknowledged the contribution of India into the global mobile manufacturing, Apple mobile manufacturing sectors. Given the fact that they already seen a success of all the initiatives that they took the last few years, there will be more PLI schemes that could also be announced in order to encourage investment in the defense, investments in energy sectors, investments in water transport sectors. And you will find some kind of innovative approaches coming in. So while, of course, all these questions will be there, but I think there's also time for, given the fact that globally, most of the economy, if you look at it, they're all fiscally weak. And India is one, I think, fiscally well positioned. And the fiscally is about 4.3, 4.4%. It's well positioned. But my own belief is, even if there is a marginal dip in the fiscal, I'm sure they will be able to actually give some kind of fiscal incentive in order to drive the overall consumption momentum. I'm expecting this budget to be somewhat more, rather the sentiment booster for both the economy as well as for the market as a whole.
Well, there you go, the live visuals on your screens right now. Post the photo session, which just happened at the Kartavya Bhavan. That's the finance minister's cavalcade now moving to Parliament. And I noticed that it's an EV this time that the finance minister is traveling in. I did spot that green number plate. So let's see whether there's something specifically coming out for EVs or any of these, futuristic sectors, anything on energy transition, anything on data centers, etc. Other than, of course, the larger purpose of job creation, which the finance minister does announce this time around. But Bala, for a mutual fund investor, what should they be doing in this time of turmoil where they have been the only cushion that the market has had?
I think one of the areas where I think government may have to revisit. One, as we have made equity market very powerful in the country, providing capital to most of the companies that are coming to the equity capital market, raising resources. The mutual fund has been the provider of capital all these years, especially last 2 years. We have the biggest provider of capital. A similar situation can be created in the bond market side. Therefore, there is a high probability that government may consider some bit of tax incentive for promoting fixed income mutual fund schemes through by providing some kind of tax adjustment. Along with that, they may also address the demand that is coming from bank fixed deposit investors. Also need to be rewarded. Therefore, there is a high probability this time they will try and fix this issue once and for all to ensure the bank deposit growth continues to remain somewhat robust. At the same time, mutual fund fixed income schemes also get revived, and therefore the bond market can be developed, and therefore you'll have a capital market, you'll have a strong equity capital market and a strong debt capital market. I think both can come. And finally, given the fact that the last 2 years, the foreign institutions have been a single-sided sellers for a variety of reasons, there is high probability they can also revisit the capital gain tax, the long-term capital gain tax, by making some adjustment in STT, or even the capital gain tax can be reviewed, given the fact that we need a lot of flows in the next few years in order to ensure that we have enough flows so that we are actually able to make it a little better than most of the countries, especially in the currency side. And we need actually forex flows this year. Though we current account deposit, we are very strong, balance of payment very strong, and FD investment is reasonably all right, but we need still more flows in order to next level of growth. Therefore, the segment of FIS flows cannot be ignored forever. Therefore, the high probability this year, they may probably try and address it And given the fact that India is actually in the cusp of high growth, the foreign money coming in, I think we'll probably achieve our the vision of 2047, Viksit Bharat. We'll move in that direction.
Absolutely. But Porinju, you know, vision, the global chatter, everything aside, what about the small and mid-cap investor, which has really suffered at least all through 2025? And, you know, we all know how vicious January has been. Is it time now to hunt for the mid and small cap, sort of battered investors? And where within small and mid caps are you finding value right now?
Yeah, absolutely right, Aisha. I am one of the major victims of that, you know, that broader market crashing down, which is not actually media maybe not fully aware. The way, you know, the number of stocks which have gone down by 50, 60, 70%, and, you know, 30, 40% category, that's a very quite large number. So, of course, all of us were aware, you know, a couple of years ago, or maybe 1.5 years ago, the valuations are not comfortable. A lot of managing stocks and, you know, driving stock prices with some cartel. All those kind of things have been happening normally. But I think...
Right, you know, Porinju, just hang on there. I will come to you, and who better than you actually to give some sound advice to mid and small cap investors. But just going to mark what the market open is like, extremely muted and tempered. And today, perhaps, you know, irrespective of whatever volatility you may see related to the budget, the volumes, remember, are going to be very low. It's a Sunday. There will be no institutional participation whatsoever. So completely flat for the Nifty, for the Bank Nifty, and for the Sensex as well. It's the defensive nature of the market which is clearly evident on the screen right now. Pharma is holding up 0.6%. But the pocket that I do want to look at is the Nifty metals. Look at what is going to happen on a Hindustan Zinc, on a Vedanta, Hindustan Copper, because remember, there's been a very, very sharp track in some of these commodities in the last two trading sessions, and that perhaps is going to reflect on some of these names. Vedanta, a gap down of 8%. Hindustan Zinc, it's a 10% gap down that stock has seen, because this was really the parity and, you know, a collaboration to the entire silver trade, or proxy rather. Hindustan Zinc 565 is where that stock is. Vedanta has slid about 7.6%. Hindalco as well is down. And, you know, unfortunately, the weakness on this entire precious metal trade is trickling down to both the ferrous as well as the non-ferrous pure metals as well. You can see the entire sector really battered and bruised, and that also is weighing heavy on the indexes right now. But given that it's a flat start, so I'm sure there are a set of movers as well. Let's see what the likes of, you know, an L&T, some of the railway names, BEL, the mighty BEL, and the most resilient name that you've had in the last 1 year perhaps. What is that doing? Because these are typical budget trades which would be pulling the markets up as well. Almost a 1% uptick coming in on BEL as we speak right now. L&T marginally higher, although, you know, the commentary from L&T on its numbers were actually very strong. The market, though, is not really sort of rewarding L&T for that just yet. It has been a more hunkered down reaction from L&T post its numbers. What about Nestle? What about some of the FMCG plays? They as well perhaps would have their defensive tilt. Not quite actually. Nestle is down. Unilever also is down. ITC should come up for you on your screens. I want to check in on what the likes of Unilever as well are up to. Interglobe Aviation, Titan, HDFC Bank, Bharti, Reliance. Some of our experts believe that some of these large cap companies are also coming into a little bit of a value zone. HDFC Bank surely holding up about almost 0.5%. Amber, Dixon, PG Electroplast, that entire pack, and of course the EMS themes as well as a cluster is something that you may want to keep your eye out on. As also, I want to see what the likes of an Anantaraj, etc. are up to. These are, of course, you know, the pure proxies, or even Lodha for that matter, which is now looking to hugely invest into data centers, at least in the state of Maharashtra. That stock is a little bit tempered, but maybe Anantaraj, wherein things are actually beginning to happen on ground. So these are some of the sectors that we're looking out for? Swiggy, of course, cracked very hard in Friday's trade. Let's check in on what that name is doing. Some of these IT services plays were also hunkered down in Friday, and nothing much really has changed from there for any of these names. But yeah, Porinju, want to come back to you. You were talking about and giving us some words of wisdom for small and mid-cap investors, which have really got bruised pretty much all through this year. Where do they hunt? And do they hunt at all? Again, in mid and small caps, or should they be played safer now and look at large caps because they also are in value zone right now?
Yeah. Now, I feel, the stocks have come in general to very, reasonable to attractive valuations in the small and mid cap. A lot of them, hundreds of the stocks, after, going down by 40, 50, 60%. See, there is still overvaluation in many pockets. When somebody talk about metals, everybody jumps into that. Too much money chase and become overbought and, beyond reasonable valuation. So now what's happening in Hindustan Zinc or copper, kind of stocks? They are very sure to react to the global things. And when the way people chased gold and silver, maybe there is a basic principle and basic rationale behind the bullish trend in all those things. But to what extent? When here we have experience, we talk about defense stocks or railway stocks, or now the AI stocks. See, we have very limited number of companies with a limited area of business in these. So a lot of money chasing those companies makes it overbought and overpriced. And then there can be 2-3 years, sometimes 5 years, these stocks may not move. That is how some of the valuations have happened because of the frenzy happening in those kind of sectors and kind of things. So this is totally understandable, and we will see very long-term correction in some of these stocks because their activity and even scalability and the market opportunities are limited. Even though they can make a lot of profits and profit margins, I feel investors should look at the valuation, of course, in the background of the earnings growth and the visibility. And the third thing, the macro level, the India prospects. Aisha, that is where we have lot positives. Now, when US is threatening us with tariffs, it's all because of one person, not so civilized and, too much ego, talking a lot of sense and nonsense all mixed together. So you cannot trust what they will do next or kind of thing. But the silver lining, the kind of, now we have already done FTAs with 8 major countries. So the latest was EU. And, EU is something, what I understand is around 70% of US in terms of economic. And they are our largest trade partners with around $138 billion of trade. And now with this FTA, I'm telling you, this can double in the next few years, the trade with Euro. And now I was just reading yesterday, the EU has increased the defense budget significantly to 2% of the GDP. And they have given an indication that this may go to 3, 4, and 5% in the coming years. So India may have to play a very serious role in this. Some of the Indian companies, maybe some of them may be not listed. They may come listed later. So I think opportunities are immense for India. And India is on a strong wicket globally today. Nobody will doubt about it. The government and our people have done very smart moves. We are in talk with over 50 countries for FTA. It's not a small thing. So in fact, India's global trade can go up significantly in the coming years. Whatever is our strength, our competitive advantages, and we can utilize that. And I appreciate government's fiscal prudence and keeping the economy, very intact. If we go loose on that, too much freebies. Many states are doing these freebies and getting into trouble. But as a nation, I think we are in control. There is a discipline followed by the government. Otherwise, we would have been already in trouble. The kind of global turbulence, geopolitical problems of the last few years. We have to live with the geopolitical problems. It can increase maybe some point of time. Now people started talking what can happen in Iran. So I think whatever happens anywhere in the world, India is well placed and we adapt very, very fast and quickly. So that's a commendable job by the government.
Absolutely. And here's hoping that the budget is going to be progressive and only instill further confidence that us Indians have in the country's future. But Porinju, thank you so much for your time. I know we are keeping away from feeding your ostriches at the farmhouse. I can see it's a different backdrop. You're not in your Kochi apartment, are you?
Yes, I'm in Cochin now today. Being budget, I didn't go back.
Thank you for your time, Porinju, as always. Let's